All right, cool. So we're recording Friday, 7:30 a.m., March 20th, and prices of Bitcoin currently at 6610. Obviously, the current price does not reflect what has transpired over the last several hours, which has been just a crazy momentum in price action, right? Clearly, we saw, overnight what seems to be just an insanity in price action and movement. And I think if you look across the board, right, over here, okay, this is the website where I can monitor all the indices across the world. You could see everything is pretty much green. Okay, yesterday the U.S. markets were green. Today the European markets are green. The Asian markets are all green for the most part, except I guess Japan. So basically across the board, we're seeing, sea of green, right? And so the thing is, folks, this sort of was expected in a sense, right? Unfortunately, it came at the expense of our short position, being stopped out right here with, -6% loss, right? So now what do? We evaluate and we try to figure out, okay, is this the move that's going to take us higher, or is this it? Right? So first we have to go back to the stock market and try to figure out, okay, where are we in terms of potentially a cycle, right, of the current sell-off. So remember, I've explained to you how the Dow theory of cycles works, right? Especially the bear cycle. So remember, as per Dow theory, right, you usually have, once you create a first, drop right here, that's usually a phase one. That's, your first form of distribution. Your second form of distribution is right here, where prices come back up. This seems like, to most people, a rally. People are going to buy in, with euphoria, and everything is great and hunky-dory. And then, this is where the public participation helps right here with the second phase of distribution, okay? So this is phase two right here, all right? And then the third phase right here is the big drop of capitulation, okay? So that is your Dow theory playing itself out, right? So if we look at the current cycle, okay, we can make the argument that given the world events right now, given where we are right now, in terms of coronavirus, in terms of recession being priced in terms of major borders being shut down, airlines being shut down, oil is still down, I would probably say to a higher degree of confidence that this is probably your phase one. Okay, phase two is probably going to be, your sort of ranging, this kind of movement right here. Potentially anywhere between, this low right here and this high right here, which is not high, but rather the previous consolidation base, okay? And that's around the 382 fib. Usually prices get back up to 382, maybe even the 50 fib, making things look, how would you say, extra appealing, okay? And if that's the case, and say prices come back up all the way, it's very possible that, Bitcoin starts moving maybe even a little bit higher from here. Okay, so we've already broken out, right? So as per Bitcoin, we've done a couple of things. Okay, a couple of very positive things actually. We broke out above this area right here, which was the 6233 marker. All right. Overnight, folks, again, I wasn't up for this, like I wasn't awake, but if I was, this was something I would have closed out manually, and I would have avoided this loss right here. I'll tell you why again, right? Remember, I'd stated that yesterday when we saw this candle right here, what we wanted to see was a follow through to the downside. Okay, not just, printing another hammer and then pushing this back up. So those of you who are in the European and Asian session, you had an opportunity actually, especially you guys, you had an opportunity to get out in actually these two candles right here. So basically the last 8 hours, or rather, no, not the last 8 hours. I think the previous 8 hours before this, 4-hour candle right here. Okay, so you had these two candles to get out essentially. All right, And especially this one. Once you start seeing a 4-hour close above the key marker right here, that was sort of your signal to get out. Now, again, I unfortunately was sleeping overnight, and so I didn't get the opportunity, and I got stopped out of my position. But yesterday, if you remember in my video, I stated to you guys that if you did not feel comfortable in this position, you had a chance to get out, right? Um, let me see here. If you look on the 5-minute time frame, right, after that rejection right here that we got almost to 64, 61, we pulled back all the way to about 6,060 almost right there. Okay, so you had an opportunity to get out, here, multiple hours, several hours right here. Okay, and unfortunately in trading, again, it is the risk that you take to set wider stops, but you also size down your positions. And it's also the risk that you take when you realize that when a market is sort of pushing aggressively like this, right, and you see very very advantageous um, candle spreads like this at key rejection levels. Okay, this is to me the best short that we had right here. Okay, we cannot help it if this happened, and I definitely can't help it if this happened overnight, right? That's just a part of life. I can't stay up 24/7 and monitor my trades and try to figure out what's going to happen, right? So 6600 was my breaking point, and I said, okay, I'm gonna let that thing go right there, okay, at 6600. And so I took my loss and I walked away from it. But notice that we actually had to push even higher, right? And so this is the push that I kind of want to explain a little bit. All right, we went all the way to almost, let's just say 7,000, because we went to like 69 and some change. I think exactly it was 69.46. So let's just say 7,000 for now. Okay. So the reason why I want to explain that is because if you look at this particular drop from here down, notice that there's really no 1 hour consolidation candles in here. Not a 4 hour, not a 1 hour, just a straight drop, right? So what we really call this is an inefficiency. Okay, and it's an inefficiency because everyone was sort of getting steamrolled right here. Okay, and the market makers, when this started dropping, quite possibly just got out of its way, did not come to handle the price until this particular area right here. Okay, so once you get rolled over in price like this, it's very easy for this particular area to be sliced through to the upside. Okay, now again, hindsight is 2020, right? If I had known that this was going to break up, I would have taken a long from here, potentially, maybe to this high. Okay. Now there's a couple of caveats, right? We're looking at current price action and we're seeing, this kind of pull down from the 69.50 rejection. Okay. So what do we do in this particular instance? All right. So we can look at it like this. Okay. So we've come down from the high. All right, we've taken the liquidity from this consolidation and we have not closed in below. So right now at this very moment, what you could potentially do is take a long with a stop just down here, okay, and ride this thing back up to, at the very least, these candle closings right here around 68.43 or to the high of 69.45, or as high as, like I said, that inefficiency gap all the way up to, okay, all the way up to this low consolidation period right here. And that's around $7,500 or so, okay? Now that is possibly an ideal situation where price kind of just keeps slicing up due to the lack of, consolidation during this drop, okay? And so what that tells me is, if we also monitor the price this way, where price, say this is the bounce, right, and we start pushing up from here, we can take a long position, place your stop right here, or if price somehow comes back down again further, comes back to tap this area as support, which is 64.63, then that's another potential long as per risk to reward ratios. Okay, the only thing I'm concerned about longs, folks, and I know, listen, I'm a far more conservative trader than most, right? My job is to look at the smaller picture as well as the larger picture. All right. Now, here's the thing about the larger picture. Sometimes it's actually not visible to most people because they're too biased and concerned with price, and because they're married to the fundamentals of BTC, they're kind of trying to see price, irrespective of technicals and fundamentals, because it's in their eyes just the most bullish asset or whatever, right? But the great thing about this particular time where markets are selling off is that you can essentially see pretty openly what's happening in the world, right? Countries are being shut down, economies themselves are almost closed off. The virus is impacting more people, killing more people. So the effects are uh, pretty much undoubtedly clear, right? So the question is, do you believe in these effects, and do you think that from here, BTC is going to just keep skyrocketing, or do you kind of just wait, maybe let price do its thing, maybe catch a couple longs here and there, but overall you keep your bias short? Okay, don't fall into the narrative of the safe haven, the fact that Bitcoin is just taking off in this bear market. Because remember, Bitcoin is not the only one that's taking off. I just showed you, right? I mean, markets across the board took off. So I don't want to hear that garbage of Bitcoin just almost hit 200% from its bottom. Yeah, I mean, of course it did. Like, we basically cleared out all demand. It takes maybe like $50 million to push this thing back up, at the very least. 50 million, and at the very most, maybe like 7,500 million dollars, which a lot of funds and asset managers easily have, right? So the fact of the matter is, because now this is sort of a low liquidity asset, the price to move up and down is going to be much easier. Okay. So again, ask yourself the question of, do I believe that this is sort of the end of the cycle, and from here we're just going to start bouncing back up, or do I subscribe to the Dow theory, which is that we might just be in the phase one right here, maybe completing or getting into the phase two, which is this public participation into the distribution, where it looks like price is going to reverse back up, but then the third leg comes and just torches everyone, right? And by the way, I actually want to explain something else which I find interesting. Did you know that over the past 3-4 days, actually just this week, okay, I have had almost 4 or 5 people, friends of mine and family from the US, start to talk to me about investing in stocks. Okay. And they said, hey, it looks like, this is the bottom. I've been watching CNN, CNBC, Bloomberg, and, the analysts are calling for this being the bottom. And, here are some good stocks. Should I buy Tesla? Should I buy Facebook? Should I buy these, different stocks? And the reason I'm telling you this story is because here's the thing, okay? Most retailers, like my friends and family, are never the first to realize when a bottom is put in. Okay, let me repeat that. Retailers do not figure out when the real bottom is put in. More than likely, to me, that tells me that if the news media, that the analysts, and now the retailers are subscribing to the notion that this is potentially the bottom, more than likely it's not. Okay, more than likely we might be in this particular phase right here, where you see this ranging right here. Okay, this happened for October through December, so almost 2 months right here, right? That ranging happened for 2 months. So more than likely, we might range like this for 2 months or something, and then break to the downside. Okay, again, the story that I just told you, looking at the market structure and understanding where we are, looking at the aggressive sell-off that we had, the Dow theory, as well as looking at the overall environment around you regarding the virus, right? Just ask yourself, do I want to be the kind of person who's going to try to go all in and try to buy BTC right now at 6,000? Or do I just, potentially maybe hedge some longs here and there, but overall start looking for short opportunities? Because I personally believe that the market is going, down further. Just ask yourself those questions, and then start, taking some trades. Okay, now I know we've taken 2 losses in 2 short trades so far. Okay, both came pretty early wee morning hours for the US time zone. First was, I think, this one right here. Okay, and the second was just today, so yesterday and today. Now I'm well aware that, thinking in a short bias, especially when the price has moved up like this, is tough. I get it. I get it. But just remember that, you know, it doesn't pay to go long or start thinking long after prices moved up aggressively like this. Now, I'm not saying that, oh, well, don't ever think long whenever prices moved up. I'm saying that keep the overall price action and current structure in mind from the larger time frames, okay? The larger time frames being this, right? Now, two good things that we've done so far, okay? I'll tell you. Number one, we broke above this key low right here from, let me see, let me go back on the 3-day chart here. Number one, we broke above the 5,800 low right here that we had put in. That was a range low. Okay, we broke above that. All right. Number two, we broke above the $6,400 low right here. Okay, from 2018. I'm sorry, 2019. The one we just put in last December. Okay, but this one still has, almost a day and a half to go. And today's daily candle also has about 11 hours to go. Okay, so it's very possible that we can close this daily candle all the way down here, right around $6,400, which would be kind of like a SFP, if you will, that had essentially poked in quite a bit into this previous, support turned into resistance, and then, may later start sending us down. Okay, so that is, another opportunity and a potential option for you to look at price that way. Okay, another way to look at it is if prices close above here, we could start looking at yearly open and potentially higher targets towards this daily consolidation before this drop off. And that's anywhere between 7,500 to about 8,000. Okay, we can even start looking at pivots, right? The pivots are pretty helpful in this particular case. Okay, if we start looking at pivots, let's see here. We broke up above the 1 hour pivot right there. Okay, and then now we're pretty much heading towards that R1. Okay, more often than not, in my experience, when the pivot breaks like this, and price actually cleanly smashes through it, more than likely it's trying to go to the R1. Okay, so it's very possible that on the pullback we can buy long and potentially start targeting this R1 right here around $7,800. Okay, and that 7,800 matches this previous consolidation before the drop off. All right, so that's one way you can start thinking long, I guess. Okay, on the 15-minute, what we've done is something kind of interesting. We broke up above the R1, came back, broke below it, and now we're kind of using that as resistance. Okay, if we start breaking up above the R1 right here, which is currently around 66.80, let's just say, okay, and we hold, then we can start targeting R2, which is around 71.60, well, 71.75, which also happens to be the yearly open, or the R3, which is 78.62, which I said is that R1 pivot from the 4 hour. All right, so we'll have options. Okay, so like I said, right now, what we could start doing is you could start positioning yourself long, okay, and you could start placing your stops below this area or wait for a retest right here. Okay, I'm, to be honest, just reluctant on taking longs unless I see really great technicals playing out. I really need a great RR and a great reason to buy long, because again, what I'm really doing is trading against the larger time frames of how much we've dropped, trading against the macro environment of exogenous events that are reshaping the world around us. So I'm just much more cautious when it comes to taking longs. But I provided you some opportunities where if you want to go long, you have those opportunities. Okay. All right, let me see here. So yeah, Rex says shorting from 8K to 3K would be such a sick short. Yeah, it very well could. Listen, while everyone in the world is starting to get bullish on this, um, my friends and family getting bullish and thinking this is the bottom, just remember that, you know, number one, all right, here's another thing that I want to explain to you guys, okay? This, after you do this right here, oops, after you do this right here, this is not how bottoms are created, okay? This is, to me, what I foresee is possibly, a bearish rally right here, okay? In my experience, when prices sort of significantly dropped off like this is not really a shakeout. Okay, this is not really, the end of a marked capitulation. This is a crazy, form of events taking place. And if you really want to climb back up, you may possibly have to spend a couple months down here. Okay, and I know that's a long period of time for a lot of people to sort of wrap their head around, but that's kind of how bottoms are created. Okay, especially in Bitcoin, you could see bottoms like this over here in 2019 were created almost for 6 weeks. Over here in 2019, they were created for almost 3-4 months. You know, um, I mean, we could go back all the way to, well, I guess XVT doesn't have that data. But point is, you've at least seen the two recent bottoms, right? And you understand that they're usually, long, drawn out reaccumulation periods, okay? Now, again, it doesn't have to be that we have to have a longer accumulation like this. But in my experience, it's just bottom. I don't see bottoms being created like this, okay? you know, like I said, we could very well be in the phase two of the bearish rally where everyone and their mother starts wanting to, buy stocks, okay, or buy Bitcoin, okay. Um, so let me see. Harry asks, agree with Dow theory. I was long from 5,800, closed at 6,100. I did not think it would pump this high. Yeah, that's the thing, right, Harry? I mean, and for the rest of you folks, Bitcoin has always sort of surprised us in how low it can go, just like it did right here, and how high it can go, just like it did right here. Okay, that's what it does, right? It does not follow the general movement of how other markets move, where it kind of chugs along, hits resistance, pulls back, then breaks through. It doesn't do those things. Sometimes it just starts ripping and ripping. And that's because it's such a small market, right? It's a very illiquid market, and it doesn't take a whole lot of money to push the market up or push the market down. Okay. Um, Let me see. Daily rejection of the 21 EMA. Let me check that out. Actually, um, let's see here. No. Let me turn off this. Let's get an EMA in here. Oops. I haven't seen the 21 EMA in a little while, so let's see. Yeah, I mean the 21 EMA is, it's been pretty solid for us. Let's do yellow. Let's see where it is. Oh wow, that's I mean pretty much a perfect tap of the 21 EMA. That's really interesting. So yeah, I mean even over here, we rejected the 21 EMA right there perfectly and then sold off. And now we're rejecting it again. So yeah, good catch, Harry. I wouldn't have even thought of that. I mean, the only reason I thought of 69, 7,000 area being a potential rejection is being in the middle of some horizontal. I didn't even catch the 21 EMA. So yeah, I mean, for those of you who are unaware of the 21 EMA, it's just this moving average that's been quite helpful for Bitcoin in terms of finding support and resistance for the last couple of cycles. Like for example, over here, back in 2019, was support right there, support all the way up, support all the way up, support right there. Broke down a little bit, but that was like a bear trap, and then support all the way up. Once it broke down right here, you can see it used as resistance, broke through, resistance again, broke through, resistance again, and smashed through right there with resistance right there and resistance right there. So anyway, point is you can, look back for several periods essentially and see that the 21 EMA has been acting quite strongly as a key SR moving average, okay, for Bitcoin on the daily time frame. So currently it's at 69.24 and rejected price. Price went to almost 69.46, so about $22 or so, right? It went higher. Yeah, very, very good observation. Rex says, how much do you use the stock market as a reference? Since BTC started rallying slash bottoming earlier than the stock market, since the stock market seems to lag behind BTC. Okay, so this is a great question by Rex. All right, Faisal and I spoke about this a little bit, and I think he also put this in his update, right? So if you look back in his update over here, you'll see that, he said he wanted to see the performance of, both high growth and small caps, right? And he said yesterday was kind of encouraging, right? He said, I've been wanting more clarity on if the trend of high growth could be sustained. Okay, remember that Bitcoin is technically considered, these high growth and risk assets, right? So he says, in order for a bottom to form, we need to see high growth and risk assets outperform. Okay, so let me explain that and extrapolate that a little bit. Okay, the reason you want to see high growth and small caps outperform. Okay, so number one, IWM is the sort of small cap index in the stock market. Okay, if you look yesterday, IWM clearly outperformed the S&P 500. Okay, it opened at 99 and it closed at 103.87. So let's see how much of a gain that is, right? So that's a gain of about almost 4.38%. Okay, so let's split the screen right here. Okay, and let's do this. Okay, so instead of gold, let's pick up the S&P 500 again. All right, so let's look at the daily on the S&P 500. All right, so we're on the daily. Okay, so the S&P 500 moved about, from open to close, it was 0.62%. Okay, so IWM being the small cap index, okay, which is, kind of your high growth, momentum stocks, all right, that was a good, 4.6, 4.7% move versus the S&P 500, which usually has a basket of larger companies, only moved about 0.62, less than 1%, let's just say. Okay, these two right here give you an indication of how Bitcoin is performing or should be performing, which is that Bitcoin is also an asset that is considered high risk, right? That is considered small cap, if you will, and it's also considered a speculative investment. Okay, and you're probably wondering, what is sort of the relation here, right? And why is that important? Okay, remember that Bitcoin, all right, because it's a high risk asset, it will often act, as a leader, because when the markets overall are looking very bullish or very bearish, this asset itself is considered to be high risk and speculative. So it will move drastically before those assets move, and also at a much higher pace. And I don't mean before as in like, it's going to move week or months before. It's usually like sometimes a couple hours, sometimes even a day. Okay. If you remember that, Bitcoin started selling up here, it started selling off, maybe 5 days or a few days before the S&P 500 started selling off way up here, right? Like the S&P's first, topping was right around February 19th. Bitcoin topped around February 13th. Okay, so about 6 days apart, right? High growth, small caps, high risk assets like this sold off aggressively, and now they're pushing back aggressively. Okay, because remember, people feel much more comfortable, right, when they're starting to put money into speculative high risk assets like this. Okay, that means we're calling it a risk on environment. risk off environments are usually when people start recognizing that, hey, the trend is, not really good, and fruitful for high risk assets. Okay. So it's better that we start selling these assets first and getting out of them because they're liquid. There might be a little bit more, danger to its volatility. So the smarter players try to get out of it beforehand. All right. So the point is that if you start looking at things like IWM, things like Bitcoin, of course they're going to move at a greater pace than the S&P 500. Also because S&P 500 is a much larger index to move. Okay. So, that's, kind of where we are, where if we start recognizing that, okay, a high growth asset like Bitcoin is, starting to move, the stock market is of course going to follow a little bit. All right. Let's see. Allegic says BTC bottoms have been created for a while, but this is the case. But is this the case for the stock market? In other words, it's kind of harder to catch the stock market bottom versus BTC. Yeah, I mean, listen, again, I can't stress this enough, right? This is a very unique situation for Bitcoin to be in. Why? Because we're facing a global event together in all markets across the board. Nothing is, safe from the virus, right? So, for example, the debt bubble in 2008, 2009 really had nothing to do with, gold, right? So commodities for the most part were a little bit more safer, even though they got sold off a little bit earlier on in their life, or during the recession. But that only happened because, again, people wanted to cash out and get into, the safe haven, which is cash, right? They wanted to essentially sell off their investments and be in cash. Okay. Now, with Bitcoin currently, because we now have a global event of the coronavirus, global GDP slowdown, macro recessions across the board, it's hard for Bitcoin to be seen as an asset that people want to invest in. Now, there's probably people out there who are in the community who say this is going to be a safe haven, but there's two things that they're not understanding. Number one, you're kind of going against trend of the overall markets around the world. Okay. And I find it really hard that Bitcoin is going to be the one that kind of finds success and yield when most of the markets in the world are selling off. It very well could. Listen, I could be totally wrong. Okay. But I just find it really suspect if it's going to do that, or, if it does, right? Number two, remember that Bitcoin has been fortunate enough. All right. Bitcoin has been fortunate enough to ride on the coattails of what was a 10-year, right there, 10-year bull run. It has never faced a significant recession or even a significant pullback. Okay. And clearly the last, several weeks should tell you that even when the S&P 500 was selling off, okay, Bitcoin sold out far more aggressively. Remember, it dropped almost 60% from this top, right? I think people often forget what just happened like 2-3 weeks ago. Okay, we dropped almost 60%. And you could probably make the argument, okay, so what? It dropped 60%. It's now up almost, 90%, right? But that's not the point. Okay, the point is that if we are facing a recession overall, I would probably say with higher level of confidence that Bitcoin is probably going to get sold, right? Because remember, in recession times, no one really gives a shit about investing in, the future of digital cash. All people care about is cash, like the real cash, dollars. Okay, and this chart goes to show you what's happening in the dollar world. I mean, look at this. This is the US dollar just skyrocketing. Okay, this is everyone and their mother looking to get into the safe haven, the US dollar, and saying that, we'd rather sell off stocks, we'd rather sell off, things like gold right here, as you can see, right? Gold has been selling off right there. US oil has been selling off right there, right? S&P 500, as you very well know, has been selling off. Okay, and also, this is the most important one too. Treasury bonds, even now, have been selling off. Now they're rebounding a little bit. But again, if we're in the midst of this cycle and this thing pulls back down again, even 10-year Treasury notes, which are some of the safest bonds in the world, are starting to sell off. That should tell you what kind of liquidity crunch we're in, right? That just tells you that people across the board have been looking to get into cash. And the most prized currency across the world is the US dollar, as you can see right here. Okay. If you compare the dollar against currencies like the peso, right there, the dollar has rocketed against the Colombian peso. We got T-Bone in the house, so I'll pull up the rand. Again, dollar has rocketed against the rand right there. I don't know how the dollar is done against the euro. I haven't quite checked. Okay, against the euro even, it's rocketed, right? So basically what this is telling you is dollar is gaining strength on all fronts. Against the yen, we just took a yen trade the other day and we made money, right? Look, even the yen right here, So the dollar is gaining strength and a strong foothold against all these currencies. So what that tells you is the dollar is getting stronger. Overall, people around the world are selling investments and equities to get into cash. And more than likely, if they can get into the US dollar some way, somehow, that would be great, And by the way, you can start seeing BTC sell off a little bit. Okay, so remember, we're looking at this particular area for, maybe a retest. It doesn't have to be exact, but if you look at this area as a potential, bottom right here, you could go long. Your stop could be down here or somewhere in the middle right here around 63.75. And then you could start taking this long if you believe we're going to go higher. Okay. I'm actually, kind of considering a long now that price is pulling back to this particular area. Gives me a good RR right here because we also stopped out these longs, and now we're pushing back a little bit lower towards a retest of this resistance into support, okay? So after I get off this call, I'll be considering going long. And like I said, the targets will be, that 68.50 marker. We'll start targeting 69.50, which is this high right here. And then that 71.65, which is the yearly open. And then, if you start throwing on pivots right there, we can go up to, let's see here, where's that R3 right there, all the way up to, 78.80, which is also around the R1 pivot of the 4 hour. Okay. But yeah, so, now you understand my mindset of, where we are overall on these things, right? Did the Dow theory work during the 2008 crisis? That's the next question. All right, let's check. Okay. I am pretty positive because I looked at this just yesterday or maybe a couple days ago. Let's see. So let's go back on the weekly time frame, right? So here's the start of the financial crisis, October 2007. Okay. Remember this, these kinds of movements, if you were living this like I was, you thought that there was really nothing going wrong. I still remember the CNBC talking heads, people on MSNBC, CNN, Bloomberg, everybody talking about, hey, this could be, potentially the bottom. There's really nothing too much to worry about. There were even, some hedge fund managers and people talking about that. And then eventually, this happened. Okay, this, right here. Okay, so even if you bought in anywhere in here, right, you still suffered almost a 50% extra drop. Okay, remember from this high to the point where we hadn't completely broken down, that's about 25%. Okay, it's almost analogous to the cycle we're in right now, right? We're pretty much down almost 25-30%. But then after that we ranged and we chopped around for maybe a month or two, broke down even further, and then broke down another big drop of 50%. Okay, so yes, this to me is the Dow theory. This is phase one right here. Phase two is public participation right there in distribution, and this is the start of the final phase three, which is the capitulation and panic. Let me see if I can show you guys that Dow theory bear cycle. There we go. Okay. Let me see if this one is it. Okay, there it is, right? I mean, pretty simple, okay? distribution phase one, public participation right here, and public participation in distribution right there, and then panic, phase three. Pretty obvious, right? I mean, these are not things that are super complex. You don't need like a freaking you don't need to be a rocket scientist to understand how this works. And here's the thing, folks. I don't know about you guys, but I watch CNBC quite a bit. I read their articles. You see me pull up CNN Business and stuff. When you see um, articles like this where was it? I think this morning, I had just stated this morning, I just saw like let me see here, the headline. Okay, so it says the headline, was global markets and US stock futures rally as central banks go all in. I mean, imagine, being like an average retailer and you see a headline like this. What's that going to tell you to do? That's going to, pretty much run into your emotions and, force you to kind of buy, right? You're going to think that, oh my God, I'm going to miss the bottom, and I want to catch the stocks at the bottom. And then you buy, you hold for a few months, and this market starts going down, and you start thinking that, oh, well, this is okay, right? We're only going down a little bit. And then before you know it, in a week or a month, you're down 50%. Okay. That's what happened, way back here in 2009 and 10, right there. Okay. All right. Let me see here. Do you ever look into gold and silver in the same way as SPX, or you can't find anything good in those during this kind of time? I mean, definitely, T-Bone. So I've explained that during this kind of movement in the crunch right here, if we compare, let's just do this, right? So let's just do gold, okay? So notice that in this 2008, 2009 time right here, right, during the recession, okay, gold started to bottom as well, because remember, this is the same sort of liquidity crisis that we're having right now, right? Because look, you can see gold is going down. Let me see, that's a really ugly color. I don't like orange. There's yellow, right? Okay, so gold right there is going down with the S&P 500, just like it did right here during the recession time. But remember, gold bottomed almost 6 months before the S&P 500 bottom. S&P 500 bottom right here, March 2009. Gold bottom right here, October 2008. Okay, so that's almost 5 months apart, right? And then gold started to rally and rally and rally, and gold broke out above its previous low right here, right around September. Whereas the S&P 500, this was the high in 2007. We didn't break that high till June 2013 almost, right there. Or actually, yeah, April 2013. So it took almost 5 years for the S&P 500 to recover from its previous high in October 2007. Okay, so yeah, I mean, I do look at gold, and it is sort of a good marker showing people that, okay, once we've sort of seen gold start to take off, that means money is starting to flow into good yield, safe haven assets like commodities. Okay. Let me see here. Continuing on from my question above, maybe also the volume profile in 2008. The S&P 500 volume profile is not going to help. Volume completely changed over a decade. Remember, right? There's different kinds of money into the markets, more money. There's different levels of interest rates you have to take into account. The cheapness of money also is another factor that you have to take into account. So the volume profile is not going to help. Let me see. On the Dow theory graphic, it had the volume profile. Could you compare that to BTC? Yeah, I can do that. Okay, so here's the volume profile. All right, so let's turn this off. Okay, so if this is the BTC top, right, and this was the beginning, let's just say this was like the first drop of distribution right here. Okay, let me see here. All right, so the first drop of distribution right here, usually the highest sell volume is seen at the top, which is kind of not what happened over here. The highest sell volume was actually seen at the bottom right here, okay? Let me see here. I mean, I don't really know if this helps, to be honest, the volume activity. Um, I'll read into that more, but I don't know. I don't think the volume profile helps right now because we just saw this aggressive drop. You know, most people would say that this is capitulation and now we should be going back up, but you know, they're not realizing overall potentially the larger cycle that we might be in, which could be, you know, recessions and larger macro factors coming into play. Could could the highest volume be from 13K high? Um, Actually, yeah, that's a good point. I would figure that this is okay. So we can look at it this way. I don't know. I don't really like that because this is the high sell volume on this 13.9K high. Okay, but the thing is that would make it that this was the first phase of distribution. This is the second, you know, phase of the public participation right here, right? Which is, you know, this phase 2 right here. Okay, and then we're saying that this is the final phase 3 of the capitulation, you know. But that doesn't make any sense because, you know, the stock market's just started selling, right? So I don't know. I mean, the stock markets came from their all-time high just recently. Bitcoin is the only one that's been coming and putting in lower highs since 2017. So we're not even in the same cycle. If anything, Bitcoin is, you know, a bit more bearish in a sense that all it's really done is, you know, it created, you know, a high right there, a lower high, a lower high, a lower high, and then it had, you know, some of these lows, lower low, lower low, and then another lower low. So it's pretty obvious that this is, you know, the definition of a bearish downtrend. So again, folks, you know, I know looking at macro cycles like this for most people is tough because it's hard to look out into the future, you know, few days, few weeks, few months in advance based on historical context. But you kind of have to do that because that keeps you grounded in, you know, where you are in the cycle, right? If you just start looking at, you know, the cycle based on, you know, if you just start looking at the 4-hour chart just like this, and then you don't take into account of what's transpired over the last several months or several years for Bitcoin, and also you don't take into account of the macroeconomic factors that are at play, you'll kind of pigeonhole yourself into positions and into a mindset of, you know, biased thinking. Okay, so just something to be, you know, careful of. Okay, all right. So I think that pretty much answers most questions. So yeah, I mean, you know, again, I don't know if you can look at the volume profile of the Dow theory as this being, you know, the first start of distribution. You know, this is the first leg. This is the public participation phase right here. I mean, it could be. I guess you could make the argument, and then you can make the argument that, you know, this is a mini cycle in the larger distribution cycle as well. You know, but I don't know. It's kind of tough. I gotta say, it's kind of tough to understand that. You know, pretty interesting to see the RSI after the recession 2009 around there with a big bearish divergence, or I'm sorry, big divergence on a weekly time frame. I assume we see absolutely need to see on the S&P 500. Well, let's see. Why the hell is this still? Oh, I see. There we go. Okay. Let me see here. Let's turn off the MACD and let's throw on the RSI. So let's see what T-Bone is talking about. Okay, so let's go back to 2009. Gosh, I really hate orange. I don't know why. Such an ugly color. Okay, so here's 2009. All right, so yeah, here's that, you know, big bullish divergence that T-Bone is talking about, right? So we see a lower low right there, okay? And then we see, oops, a higher low right there in RSI. Okay, so that's nice divergence right there, right? And by the way, as I've told you guys before, okay, remember that divergences like this are much more powerful when they are in overbought or oversold territories, and especially if it's on a higher time frame. Higher time frame, the better. And by the way, Bitcoin is selling off. Okay, so there we go, right? I just wanted to give you a quick update. So we just got our retest, okay, of this previous area that was resistance now into support, okay? Remember that you're going to be wrong on this long position if price goes like this, comes back inside, tests this area as resistance, and then starts breaking down. Then you could take a short, stop up here or stop up here, and then start riding this down, okay? That is one way to sort of go about this, okay? But again, I would expect at least a little bounce, maybe pops back up here, maybe comes back and rejects it again, and then starts selling off. But, we'll see. So anyway, let's go back to where we are presently, right, with S&P 500, okay? So we're now entering the oversold territory on the weekly time frame in the S&P 500, okay? But no, pullback on the RSI just yet, okay? But again, positive sign nonetheless that we are oversold on the RSI on the weekly chart, okay? So we'll keep an eye on divergences. It's okay. It's interesting. You've provided good insight into the Dow theory. Okay, glad you guys enjoyed this Dow theory information. So yeah, folks. Again, we've been wrong on 2 trades. Okay, 2 trades that were obviously, based on key technicals. Number 1 being hopefully holding this range high right here. Number 2, which was, holding this key high marker right here. Both of them did not hold, okay? But does that mean that we should just, start saying that, we have to be bullish now, we have to take longs? No, not really. I mean, you could take longs and, not have to accept that we're fully bullish again, right? Don't worry about, justifying your reasoning for taking a long or short based on, sentiment of what's going on with safe haven or, the halving coming up. Just trade the technicals, okay? Ignore the dumb people out there who are constantly, avoiding and ignoring the exogenous events that are happening around the world that could potentially reshape the very existence of Bitcoin, in the near term, okay? Just ignore those people because they clearly don't know how markets function. No one gives a shit about markets, just because they're moving 50, 100%, during times like this, okay? What's to survive will survive, right? What's supposed to live will live, and only the market determines that, all right? Just because you have some, digital cash and some, people on Twitter talking about this being a safe haven and, central banks are printing all this money and Bitcoin will never do that and all this garbage, that doesn't mean anything, okay? Bitcoin has not established itself to a level or credibility where it can, be talked about as anywhere close to a safe haven, all right? So, just be careful about people who have this absolute mindset of, always being in the bullish mode, okay? So, our job in this community is to give you an overall picture of the technicals of Bitcoin as a specific asset, the overall, global macro markets, how they're functioning, and, how we can look at the current market structure to give us better insight on how to trade, okay? That is our job, all right? Ignore people who are consistently talking about, safe haven and, the printing of money and this and that, all right? I do believe, those things are important, but it may not be that Bitcoin comes to save the day, okay? Then you're just stuck holding a bunch of coins that, maybe worth 50% less than they were, last week or something, right? When the markets overall sell off, okay? All right. I think that's pretty much it. I think I've exhausted all the information that I had. There was a comment about halving. I think if trillions of free money can not push markets significantly, then how much halving is impact going to have? Just forget about it. Yeah, that's a great question, Harry. Yeah. I mean, listen, you guys have seen, again, this isn't even me trying to tell you my bias, right? over the last several days, you've seen, global markets across the world start printing money, start talking about zero interest rates and negative interest rates. And the US put in a $1.5 trillion bailout, and we still started seeing selling happen, right? Especially if, say, the next few weeks and months, we start seeing, the ranging that we were talking about, and then more selling. That means we're in a lot deeper shit than most people ever imagined. And I can guarantee you that Bitcoin is not going to be, there to save the day. It might live, right? It might survive, but that doesn't mean that it survives at 6,000. It may not even mean it survives at 3,000. It may still be ticking and doing its thing at 2,000 or 1,000. And like I've said before, how can you say that Bitcoin is supposed to be valued at 6,500 or 100,000 when it functions the same way, whether it's at 6,000 or 1,000, right? So it's not really an argument. And you can see people who keep bringing up that dumb argument about Bitcoin should be worth more. They just have a bias because they have money invested in it. They need it to go up. They want it to go up. Okay. So it's really in their best interest to keep peddling that narrative of this is the safe haven and we never print money and this and that. All right, man, come talk to me, when you can't, feed your family, or your, investments are stuck and you have to liquidate your precious Bitcoin just to put food on the table, or you've lost your job. Talk about like real people, okay, who are losing money in the markets, or who need to, liquidate their accounts just to be able to feed themselves. Those are the real stories that you need to understand. Okay. It's not, no one gives a shit about safe haven and, having coming up when they can't feed their family, when they see recession on the way, when they see their job loss, when they see, maybe money being inflated. Okay. These are the things that people are just not aware of because they've never really seen recessive cycles. They don't know what it does to people, what it does to human nature. It makes you very cynical. It makes you very desperate and hungry, and people don't understand that. All they care about is Bitcoin going up in price. And that, I think, for that very reason, I think some days I hope, Bitcoin just washes out everyone and all these, Twitter trolls, and washes out everyone all the way down to like $2,000 or $1,500 or something. Okay, because then that'll definitely shut them up, and I guarantee you they'll sell at a loss. Okay, they will have not, they will not have enough money to buy back in. Versus us, right? If we wait for the cycle to play itself out, we save our money, right? Not get into heavy positions here and there. We will have money for when that true bottom forms. And again, that bottom will form, okay, folks? Whether it's next week, next month, next year, it will form. The patience will pay off. And that patience that pays off in the long run, whether it's 2 years from now, 5 years from now, you'll have more money than, any of these people ever made in any Bitcoin bull market. Okay, I promise you. That's just how markets work. They pay to the people who are patient. Okay, they give back to the people who are patient. All right. Having an emergency savings account is saving me right now. Yeah, exactly. Listen, same thing with me, right? I'm really not a big spender, folks. When you guys see me talk about my vacations and stuff, listen, I could be traveling a lot more. I could be living a much more lavish lifestyle, but yet you see me doing these daily videos, sometimes 5, 6 a.m. in the morning, and then also at night, and also on weekends, and also on vacation, right? And that's because I truly love what markets are. And it is that markets are a collective, living being, which embodies the human sentiment of what's happening around the world. And to be able to understand and explain that is, in my opinion, a unique skill set that not a lot of people have. And if people have it, right, they should be doing their due diligence and putting in the work rather than just posting on Twitter of their gains and losses, right? All I do on Twitter ever is post about my knowledge and understanding of the markets and my videos, and that's it. There's no need to get into conversations with other people because the only people that matter to me is the community that's paying for my time, right? Everyone else is just secondary, So anyway, Legic asks, in your opinion, which is the safest asset right now? US dollar. I just explained it. Look at the dollar, first of all, okay? Right here. Oops, that's a 15-minute. Look at the dollar taking off, and look at the dollar taking off against strong currencies like the euro, right there, the yen, right there, okay? I don't know how it did against the Great British Pound. Let me see. Oh, even against the pound, I mean, it's taken off, right? So dollar has been gaining strength against all currencies across the world. And that just tells me that, let's look at the Indian rupee, you know, not too bad on the Indian rupee, but still, I mean, we had a big spike up, you know, so crazy movements, you know, across the board in terms of the dollar gaining momentum, you know. Could the strength of the US dollar be supporting the strength of BTC? No, I don't know how to explain it, folks. There's nothing supporting the strength of BTC other than people who are just kicking around the price of BTC. That's it. You know, there's no one out there, in my opinion, in the world who's thinking that, hey, you know, if the world markets are collapsing, you know, let's all get into BTC and let's start making some money. I really don't think so. I think more than likely people start freaking out, panicking, and they start cashing out of Bitcoin. Okay, so I know, you know, it's kind of harsh to say, but it's just not an asset that's highly valued in this particular instance. You know, let's take a look at the smaller time frame again. Again, we're now rejecting the previous base right there of BTC support, 65.75. So again, look for this kind of movement, right? So you put in a lower low, so now you need kind of like this and like that. So you need a higher low and a higher high like this. And then you can start taking along, you know, if price gets up above this area, stop right there and ride this thing up here and further. Okay, that is it. All right, folks, thank you so much. You know, I appreciate you guys joining this call. Hope my rant wasn't too much, but I think it's, you know, pretty helpful, right? I think you guys deserve to understand what's happening in the markets. You deserve to have an honest opinion and an insight on the macro perspective. All right, y'all take care, and I'll catch up with you in the Moon Lounge.